Good morning, everyone. It's 1st February 2018, and we'll do a quick review of the scenarios for the budget 2018. Might be a volatile session, and the bull run has been on since almost over a year. And though the smart money builds positions ahead of the event and doesn't care how the event shapes up, but still there'll be a lot of expectations, and if the budget fails to meet up with their expectations, obviously there would be a reaction. And if it exceeds their expectation, then also there will be a reaction. So important point for us would be to find the points where the reaction might come. So before proceeding ahead, let me go through the disclaimer first. Disclaimer: trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All systems, indicators, strategies shown here are for education purpose only. All levels discussed here are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any investment or trade decision based on anything that is discussed here. We will not be responsible for any resulting profits or losses. So, as we saw, Nifty opened gap down and tried to push into the range. The probabilities are extremely low that in a 15-point gap, it will cross the POC or the VH of the previous day, and it exactly did the same. Twice attempted to push through the VL, uh, stayed there for a while, but then again a breakdown, leading to the value shifting lower, and then all of a sudden short covering rally, and not enough time left to play out the gap rules and accelerate down. So finally the close was within the previous day's range and nearest to the point of control of the morning balance. So overall, a neutral close. So now let's have a look what it has exactly done in the past few days. So overall, if we see, let me zoom out a bit. So this is kind of a balance. If we see this, this turns out to be a nice balance, and a failure below the low of that balance. And here, now this, though we don't have a clean excess at the highs, let me show, though this tail is not much, but overall this entire auction seems to be separate from this entire balance. So it's kind of an excess left. The entire auction of that day is feels like separated from all these 5 days. So one is, if we in case leave this balance, let's say that we start accepting below this, then what might happen is we pierce down and start pushing lower. So let's say that the budget announcement is going on, and there'll be reactions. So that reaction can come in a breakdown as well. Let's zoom out a bit and see what are the references below. So this seems to be a nice balance here, and this is again a nice balance. There is a tail on the downside, and then a spike close, and the auction moving higher. So in case of any push below the low of yesterday, it might push through this, try to push into this balance, try to push into the 890 zone, and then find nothing, bounce back up, and start rotating here, build value, and either push up or directly start pushing up. And once it enters back into this balance again, so here is this balance, and once it enters back into the balance again, then in case it doesn't fail here and push down back, then pierce through it. If not on the budget day, then later on carry its move towards a fresh ATH. Now that is when it pushes down here, fails, and does that. The failure might come here as well. So let's say it fails here and does this. That can also happen. In case it spikes up higher, goes into this zone, goes into the upper balance, the uppermost balance, and does not find acceptance there, pushes back here, tries to rotate, and any failure there and then a break would mean that we will carry down further, because then this scenario is negated because it has already found resistance or supply from above. So in case it finds supply from above, then we'll consider that it will start penetrating down and making its way through all these references and finally come back and settle here. And this would be ideal location to check, because if we see here, it started going up higher, and maybe a linearity would like today it would come somewhere into this zone. So there will be many mechanical players who would sell this breakdown, and there will be lots of speculations going on. Now let's see on the longer term what it has actually achieved. So this is a 30-minute chart, a 30-minute long-term chart. So here we see a lot of rotations here, kept on coming down, going higher, coming down, going higher, coming down. So it has made its way here and populated this entire area. Later on, a lot of rotation in this zone as well, and then finally a straight up move. Now this here again seems exhausted and then balancing towards this zone. So if this zone is broken, then as it is, it would be a bit weaker in the short term. The monthly VWAP is the previous the monthly VWAP of December. We'll have to also consider that, because that is where we have actually left everything. So that would be a very important zone, and but that comes into play in case of a severe breakdown, which is not going to happen as it is in a day or two. So not our worry to look at those far off levels. Now let us look at the daily. Now on the daily, what has happened? If you see, this is the VWAP bands, and if you see like a straight up move catching up to the top of the VWAP band, and that's why maybe that exhaustion is playing out. So in that case, what might happen is it just comes and comes into this balance. You see this, a 3 bar balance is here, so it might just come in into the mid of that and balance. So that 890 to, we'll have to give a bit of leeway. So that's why I tweeted about that 760 and 890 both. So uh, cannot exactly like predict uh, due to the volatility factor, but still, even if it pushes down below that and it's unable to get above 890 again, then we'll have to think of the bearish scenario. And also, if it goes up and rejects, so during the day, whatever is happening, we'll consider the micro balances. These are the reference levels just to keep in mind for a broader perspective. But during the day, whatever we get, we'll get minor references during the day before the market starts going haywire. Now, let's see how the rotations have played. The rotations have got bigger but a bit messy. Uh, if I do a 60 tick Renko, then what happens is you get too much of zippers. So we cannot, like, this zipper we can rely on, this zipper we can rely on, but here we get entangled because here we cannot trade because there are zippers everywhere apart from this impulsive moves. So need to adjust the Renko to a size where we get impulsive, all the impulsive moves as well. So here, this impulse, pullback, impulse, that finishes that move. There is resistance here due to this zipper, so it gets resisted into that. And also our short term SAR, so gets resisted into that, makes its move down. Now this impulse ideally should have carried into another impulse directly, but didn't do that, so went into zipping due to this VWAP support, and then pushes down, comes back up, takes resistance into this zipper and tries to create another impulse. Here it was not able to. When this gets confused, that means that there is not enough supply left to push it down further. When there is no supply left to push it down further, the auction will automatically attract towards the place where the highest volume had traded earlier. So that was this point. It got attracted into the mid of that and then zipped around it and closed. So a very normal and methodical auction. Now from this also, if we want to make references from here, then what are the scenarios? Let's just, earlier what we saw was a bit broader perspective. Here we'll see, so this is our reference, this weekly VWAP would be a reference. There is a lot of rotations here. Then comes the highest balance, so that would be our reference at 11 163 to 165, because here also there is volume all over here. So I would keep this line here. Then this area is empty, so from here till here almost there is nothing. So any push into here goes into this acceptance, can also pull back, and then finally this is a nicely populated zone at 930. So all these references might come into play. Once it starts breaking down, it will push through this. Anywhere failure and back is to remember the scenario of getting back into this entire balance range and make it its way to the top of the balance. That would be the scenario whenever it fails from lower. And the final place of failure is this, nothing more than here. So all the reversals need to happen in this case. Now on the upside, goes here, rejects, this comes into play, goes here, rejects, then again this carries forward, so this carries forward like this. And any acceptance into the topmost balance, again, even if it rotates there for like half an hour or something and tries to break out, would be a lethal breakout, and then we might see new ATH maybe continuously for a few days again. Now let's have a look at the bank Nifty. Almost the same, but the difference is it tried to go into the highest balance POC and rejected and came back into this balance. So bank Nifty has tried its best to go into that, but was not able to stay there and fell back into the balance. So overall, this is also in complete balance. So this is our balance, and this is extra, but there is no meaningful excess there, and rather weak high getting exhausted with the fair price coming somewhere into this zone. The auction is divided into two parts with a fair price somewhere into this zone. Now let's see what is the background here. A straight rise, almost linear. So we see this, and almost a linear rise. So this, if this was a channel, then uh, it goes like this, comes back, generally does this, but instead, like, never came back here. Again a new linearity starts, and what happens is, when there is momentum, they don't care about anything and just keep on driving wherever they get the liquidity. Now for this, in case it starts falling down below this, because there is a lot of activity here, and just coming below and can get back up, or else push into this balance. So it falls, comes into this balance, either gets back up from here or even pushes further and gets back up here. Now when it starts getting down and staying here, this is a sticky area because there is nothing, and a rejection of rejection is very tough, so might get entangled. This is the support and this is the resistance, then once it gets into here, and might get entangled here and then later decide what it wants to do. Now on the upside, the room is clear, and let's see on the longer term chart. So this rise is like gone up. By the way, this chart is still last week, so let's go into a daily chart. So there is a big balance here, and then a steep rise coming in here. So this rise has strong support into this gap zone, and the other thing that it might do is come into balance somewhere here. So in case it starts falling, then comes into this area of 26,550 to 26,600, comes into here, tests, and then rotates back up. If it starts pushing up, then we have to be careful that it stays above the 80h. If it fails, goes above the 80h and fails and comes back, then would be looking to for a revisit of this area. Now let's go to the Renko and see the scenarios. And also here also the VWAP bands have expanded quite a lot, and also the previous VWAP band resistance, which now becomes a support, is placed into that 26,650 zone. So that might, and even the yearly, these are the yearly bands. So let me zoom out. So this is the yearly VWAP, and this is the yearly standard deviation bands. So that comes into that 570 zone, and those bands act like supports and resistances. Even of the earlier year, there was activity and statistical uh, calculations. The algos would prefer to take these calculations and react there. Now let's see the rotations, and go into 180 because the rotations were bigger. So push through here is quite impulsive. Then this fall was also quite impulsive, and today's today's fall didn't have that impulse pullback. Should have continued in an impulse down but failed, took support of the VWAP, and impulse pullback, impulse pullback, impulse pullback, impulse pullback. This is like a fierce short covering move. When each impulse getting bigger means there were a lot of orders stacked higher, and it just like made its way through that. And that's the power of liquidity. When orders are piled up, it just gets attracted, and attracted till where earlier there was price attraction. So went into that, rejected, and where would it fall back? Where it had generated the highest volume. So here, based on this, let's see the scenarios. This is volume POC, so that becomes important. And then there is LV and right in here because no activity below that. So in case falls into this somewhere, either from here or from here, so make its way back up. The balance starts here and ends here with a minor balance above, but the overall activity is within these two bands. So gets back into this after a spike, then expected to make its way through the entire balance, stays above the highest balance, and then it can go and keep on making fresh ATH. In case pushes higher first, doesn't stay back, gets back into this balance, then the balance travel the opposite way also becomes natural, and then make its way down into this. Anything going below this would, let's go back. So I'm just matching these lines here because here also there is a balance. So anything going into this would travel this balance, and then this becomes the final area to watch. If it goes below this, stays, then would be below 26 150 to 26 200 would be bad. Now also, let's have a look at the breadth of the Nifty constituents. So this is from first January, and if we see how it has behaved, then almost half of the stocks are above uh, the open of this year and are trading in a positive zone, and half of them are negative now. But all the ones which are positive, the maximum concentration is between the 7% to 0%, and then above 7%, a lot of stocks which have gained 10, 12, 15, 14, and uh, finally this gainer is 22%. And on the negative side, there are not many stocks that have given up more than 10%. So that way the large caps are like looking positive and still looking strong. The damage was done to the mid cap and small caps, but the large cap are really still looking strong, and that's why we'll look at the supports first in the Nifty, so that if these strong stocks want to move higher, because there will be a lot of delivery volume in that, and if they want to move further higher, then we'll have to think of the bullish scenario intact and uh, work out longs at supports. So still there are no signs as such of any intermediate or long-term weakness. The weakness which is seen is just like in the immediate short term, and only if we get like a considerable activity happening today and day after, then on Friday close we can review it and see whether there can be a damage to the intermediate trend or not. Long term is still way far till we don't get a real good excess or a really good initiative move down, again a retest. So it's a process and might take even like 2 3 weeks to materialize. So till we don't get such scenario, there is no sign that we can even think that this long term trend has ended. So that's it for today, and best of luck to manage risk and size it properly. No point taking any extra risk till we don't get a good opportunity. I would prefer to stay back, watch it, and just only enter when there is a real scenario. Though I tend to enter on probable trades, because if the stop losses are smaller and if the probability works out, then the volatility adds to the gains actually. But like while telling anyone to do the same, I would be scared to do that. So would always request everyone not to jump into the trades till there is a sign of that trade shaping up. So all the best, and thanks for watching. Have a wonderful trading day ahead.